For centuries, a nation's true power has rested on what it can physically control: gold, minerals, and energy. These tangible resources have always been the foundation upon which civilizations are built, providing not just wealth, but security and influence in a world where uncertainty is constant. Empires rose and fell on their ability to command these resources, funding armies and shaping global influence. The mightiest kingdoms of history were those that could secure and protect their gold reserves, mine precious minerals, and harness the energy needed to fuel their ambitions. Control over these assets often meant the difference between prosperity and decline. Even today, beneath layers of financial abstraction and digital transactions, real assets like minerals and energy remain the bedrock of national strength. While currencies fluctuate and markets shift, the value of what lies beneath the earth endures, anchoring economies in something real and lasting. Minerals are the backbone of modern technology, from smartphones to defense systems. Every device we rely on, every innovation we celebrate, is powered by elements extracted from the ground, making access to these resources more critical than ever before. Control over these resources means control over innovation and industry. Nations that secure their supply chains and invest in extraction and processing gain a decisive edge in the global race for technological advancement and economic growth. Energy, oil and gas, still defines international relations and economic security. The flow of energy resources shapes alliances, drives conflicts, and determines the stability of entire regions. In a world striving for progress, energy remains the lifeblood of modern civilization. When we talk about global power, it's not just about stock markets, it's about who owns the ground beneath our feet. The true measure of a nation's strength lies in its ability to access, manage, and protect the resources that fuel its people and industries. The next chapter in global power is being written with tangible assets, not just financial instruments. As the world evolves, those who control the Earth's resources will continue to shape the destiny of nations, proving that real wealth is, and always will be, tangible. In today's rapidly changing world, where nations compete fiercely for resources and influence, a powerful new alliance has emerged on the global stage: BRICS. This group, made up of Brazil, Russia, India, China, and South Africa, is reshaping the way we think about international power and cooperation. Not long ago, BRICS was often dismissed as just a loose collection of emerging economies with little in common. But now, these 5 countries together represent a staggering portion of the world's population, landmass, and economic potential. Their combined influence stretches across continents, industries, and cultures, making them a force that can no longer be ignored. China stands out as a global manufacturing powerhouse, producing everything from electronics to textiles at an unprecedented scale. Its factories and workers drive much of the world's supply chains, fueling growth both at home and abroad. India, with its booming technology sector and youthful, rapidly growing population, is a rising star in innovation and digital services. Meanwhile, Russia's vast reserves of oil, natural gas, and minerals make it a key player in global energy markets, supplying critical resources to countries around the world. Brazil, blessed with fertile farmland and abundant mineral resources, is a major exporter of food and raw materials, feeding millions and powering industries far beyond its borders. South Africa, often called the Gateway to Africa, is rich in mineral wealth and serves as a crucial link between the continent and the rest of the world, especially in mining and finance. What truly unites these diverse nations isn't shared language, culture, or political systems, but a common ambition to challenge and reshape a global order that has long been dominated by Western powers. For decades, institutions like the World Bank and the International Monetary Fund, largely influenced by the United States and its allies, have set the rules, dictated terms, and determined prices for global commodities and development loans. As some of the world's largest producers of vital resources, oil, gas, minerals, agricultural products, BRICS nations are demanding a greater voice in how their wealth is valued and traded on the world stage. In response, they've established their own institutions, such as the New Development Bank, to finance projects and foster cooperation on their own terms. Regular BRICS summits, bring leaders together to coordinate strategies on trade, development, security, and more, strengthening their collective influence. Today, BRICS is far more than just an acronym coined by economists. It has become a significant geopolitical force, shaping debates and decisions at the highest levels of international affairs. The era of a unipolar world, dominated by a single superpower, is fading. In its place, a new multipolar era is emerging, with BRICS countries at its very core, driving change and demanding a seat at the table. United by their determination, these nations are working together to rewrite the rules of global engagement, forging new partnerships and alliances that reflect their interests and aspirations. As trade routes shift, markets evolve, and new alliances form, the balance of power is unmistakably shifting. BRICS is at the forefront of this transformation, shaping the future of our interconnected world. BRICS is now making its boldest move, creating a new trading system for essential commodities. For decades, Western exchanges set prices for gold, oil, and metals, often through speculative paper contracts. BRICS aims to build exchanges where prices are set by real transactions between producers and consumers, not by financial speculation. Russia and China are leading efforts to set new gold standards, while India anchors demand. Brazil and South Africa bring mineral wealth, giving the system credibility. If successful, this new exchange could bypass Western financial control and sanctions, creating a parallel universe for global trade. BRICS is no longer playing by old rules. They're building their own. The BRICS exchange is revolutionary because it's built on physical settlement, not paper speculation. In Western markets, most trades are just contracts, rarely settled with real delivery. BRICS wants trades backed by actual assets, metal for money, oil for payment. This grounds prices in real supply and demand, not algorithms or leverage. They're also exploring a new reserve currency backed by a basket of commodities: gold, oil, lithium, and more. Such a currency would have intrinsic value, independent of any single nation's monetary policy. By insisting on substance over speculation, BRICS is challenging the dollar's dominance and redefining wealth. It's a strategic bet. In uncertain times, real assets will matter most. Each BRICS member brings unique strengths and resources to this powerful alliance. China dominates rare earths, which are essential for modern technology, electronics, and defense industries. Brazil controls most of the world's niobium, a metal vital for advanced steel, aerospace, and heavy industry. Russia and China are major gold producers and buyers, amassing reserves to back their financial system. The inclusion of Saudi Arabia and the UAE brings oil power, directly challenging the dominance of the petrodollar. India's vast market anchors demand, while its growing industries need steady supplies of raw materials. South Africa is rich in platinum and chromium, and connects BRICS to Africa's immense mineral wealth. Together, these assets form a self-reinforcing and resilient economic ecosystem. The pieces are strategically placed for maximum leverage and global influence. Western financial centers are no longer ignoring BRICS. They're worried. The rise of the BRICS nations has become impossible to overlook, and the anxiety is palpable in boardrooms and trading floors across New York, London, and Frankfurt. For decades, the West set the rules of global finance, but now, uncertainty is creeping in as the balance of power begins to shift. The freezing of Russia's reserves in 2022 showed how the Western system could be weaponized, pushing others to seek alternatives. This unprecedented move sent shockwaves through the international community, making it clear that assets held in Western institutions could be vulnerable to political decisions. Many countries began to question whether their own reserves were truly safe. The BRICS exchange is the clearest sign of this shift. By creating new financial mechanisms and platforms, BRICS countries are signaling their intent to reduce reliance on Western-dominated systems and to build their own networks of trust and cooperation. In response, the West is scrambling to secure its own supply chains, investing billions in domestic mining and battery production. Governments are pouring resources into critical industries, hoping to reduce dependence on foreign sources for essential materials like lithium, cobalt, and rare earths. They're also reinforcing the dollar and euro's dominance and developing digital currencies to compete. Central banks are accelerating research and pilot programs for digital money, aiming to maintain their influence in a rapidly changing financial landscape. The fear: if key commodities start trading in new currencies, the West's financial privilege could erode. The possibility of oil, gas, or metals being priced in yuan, rupees, or other currencies threatens the long-standing supremacy of the dollar and euro in global trade. This is a new global contest: control over resources and the systems that trade them. Nations are racing to secure not just physical assets, but also the infrastructure and agreements that determine how goods move around the world. The world is dividing into competing blocks, each fighting for economic security. Alliances are shifting, and countries are reassessing old partnerships, seeking new ways to protect their interests in an increasingly fragmented global economy. The old order is on the defensive. Once unchallenged, Western dominance is now being tested as never before, and the outcome of this contest will shape the future of global finance for years to come. This shift won't just affect governments, it will touch everyone. The prices of everyday goods depend on who sets the cost of raw materials and energy. If BRICS succeeds, oil and minerals could be priced in new currencies, changing what we pay for fuel, phones, and more. For BRICS nations, this could mean prosperity and control. For the West, it could end an era of cheap goods and financial dominance. The ultimate question: who will set the price for the things that matter most? For generations, it was the West. Now that's uncertain. As BRICS builds a system based on real assets, the world is watching. The price of power itself is up for negotiation.